Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with my good friend Doug Hagren. Hey, Doug.
Hey, Kirk. Good to be here. Had a great weekend with my daughter. We were up north in Wisconsin, did a little deer hunting. It was youth hunt. She was successful. So it's been, again, to all the vegans that might be listening, I apologize, but she had a great, successful time. And the best part about it, Kirk, is just getting to spend that time with the kid. I mean, that's what it's all about, right? So the best part of the entire deer hunt. Of course, it's really cool when you all of a sudden you're sitting there and the deer are coming into view. It was actually pretty funny. I'll tell you a real quick story. I'm sitting there and I'm looking out the window of the stand and I can see two deer just standing right there. I'm like, hey, Kevin, there's a deer. There's deer. And she gets ready to go after him, but I could see she's pointing in the wrong direction. I'm like, no, they're to the right. Like, turn to the right. She turns a little bit. She's like, no, Dad, I'm on him. I'm like, I can tell. She was looking at two completely different deer that she saw out there.
Wow, Doug, where exactly do you live? Because I want to come up near you. Because there's no. Well, I guess there are deer near me. I just don't see them.
Oh man! So the sun came up. Like, legal was 7:15 a.m. and by 8:30 we saw those deer, and then after that we saw within like a half an hour 6-8 more. It was just, they were everywhere that morning. It was wonderful. She saw, but we weren't going after bucks, so she had to kind of watch it and admire from a distance. But a big rack went walking by. I felt bad for her because unfortunately, save that one for another day. But she's like, Dad, there's my trophy. I'm like, I know, we're not today.
Why couldn't you shoot bucks?
They have a choice of a buck or a doe, but just because we also hunt it, again later, I think it was more of a collective decision to go after the does only and leave the bucks for later. So it was more of a group decision making on it. But of course, for her, she's like, "What? It's right there. It's the trophy." I'm like, "I know. Admire it, and tell yourself, you could." But yeah, it's but I'll tell you the best part about this. So we get in the stand. It's dark. We go out there before the light comes up, so you get settled in, and then all of a sudden, my daughter kind of moves her stool over and just leans right into me, right, and just lays her head back and falls asleep leaning into me. She's 15 years old. Anybody out there that's a father, especially a father of a daughter, tell you what, they're teenagers, they're crazy, they're all over the place. It's the best thing ever. It'll never change. It'll never be any less when they lean into you. That's what it's all about. It was great moment. Of course, at one point I'm like, okay, sun's up here. You might want to wake up now. time to start looking. But honestly, that's what it's all about. It's not about the deer. I mean, it's nice to get out into nature, and it's certainly nice to be able to be successful. But more than anything, it's especially with youth hunt, it's that time you get to spend with your kids. It was amazing. So, but I hear you're angry, Kirk. We'll come back to that. It was a great weekend for me, but you've been raging.
Yeah, well, for Doug's joke, for those of you who don't know what we're talking about, here's a picture of me raging this weekend all by myself. Hurricane Kirk raging all by myself in the Atlantic. For those audio viewers, it's just a picture of hurricanes, and the first one that I've ever seen is Hurricane Kirk. So it might have happened before, but it's the first one I recall. So kudos to me for raging by myself. But
very passive aggressive, that's Kirk. Kirk is all bark, no bite, obviously. Actually, and so for those of you who don't know how they work with the hurricane names, is they rotate through a random name listing. If the hurricane causes major disaster, like Katrina, that name will never be used again. But if it's just a name that's used and the hurricane fizzles out, causes nothing, that name will go back on the list. So Kirk, just to let you know, this, assuming that, there's not some major impact on Iceland, because there's really nothing else out there, you may have another opportunity to rage once more.
No, Bermuda's out there, Doug. I mean,
that's true.
No one cares about Bermuda, but it's out there.
Right.
No one talks about it.
Yeah.
But yes, absolutely. Well, it sounds like, we certainly had a bad hurricane last week, and it looks like we might have another one. We'll see. But, it is hurricane season. So for those of you who are not aware, in the southeast, this is the time of year where it gets really rough. And for those of you who are interested in investing in insurance, property casualty, now's a good time to go cherry picking, because occasionally you do get good opportunities where the market discounts big property casualty insurers because of huge damage that happens.
It's huge expensive for them. This is when they have to pay.
Yeah.
And right now they are collecting a lot of premiums. They've jacked them up all over the coast. So, yeah, they're going to get discounted based on major claims. But guess what happens when those claims are over? Those premiums don't go back down, and you might be buying on discount.
Exactly. So just something to keep aware of. I haven't seen much yet that's too appealing to me, but I'm always watching this time of year. And I remember one year, I forget which hurricane it was, but it hit New York. Lots of areas were flooded, and I remember seeing, I think there were about six big property casualty insurers that dropped like 10%. Great buying opportunity. I haven't seen that yet, but occasionally it does happen, and you want to be ready to go if you're interested in that field. I will tell you, property casualty insurers are probably one of the best types of companies out there. And you might think, well, what are you talking about? Why not big tech? Well, let me tell you the secret about, the secret of property casualty insurers, because Warren Buffett does this, but he really doesn't talk about it. What do you think, Doug? You know why?
Well, first of all, insurance is basically it's an annuity because they're constantly collecting premiums, and B, they've got pretty good tax structure from what I know. So, and yeah. I'm sure tax they are extremely favorable for taxation.
So, yeah, let's get into it this way. So you mentioned two good ones. There's actually a bunch of them, but you mentioned two good ones. So tax, yes, they have a preferential tax because they take in the premiums. They don't get taxed until they have to pay out, until they have to pay that money out. So that's when they actually pay tax. So the interesting thing about property casualty insurers, and this is the big one, and Warren Buffett does this, but he doesn't talk about it. So any business in our country and in the world, really, if you want to grow and you want more money, you have to borrow money, which means you have to pay someone to borrow that money. Whatever it is, 1%, 10%, anywhere in between. But if you want to grow, if you want to build a new facility, a new plant, you have to borrow money from someone, the bank, let's say, at, let's say, 5%. You have to pay 5% a year. So every year you're paying 5% so you can build that plant. Every business does this, except for one, property casualty insurers. Here's how they work. They have what you call a positive cost of carry. So what they do is they take in premiums every month. So let's say Doug and I and all you listeners, you want fire insurance in your property. So every year you're paying $1,000 for fire insurance, let's say, okay? And 20 years goes by, you never use that coverage because you don't have a fire, right? And then you sell your home. Well, at that point, they've basically just taken 20 years of your premiums and not paid you back. And that policy is done because you moved and the policy is over. So that's profit for the insurance. Now, every once in a while, someone will have a fire and they'll have to pay that out. But if you spread the risk over thousands, hundreds of thousands, millions of people, then one, fire in, say, a month, they're making a lot of profit that they didn't have to pay out. Now, here's the thing. Positive cost of carry means that you're paying them premiums every year, and then they have to sit on that. They call it a float. And the float is the amount of money they take in premiums that they're sitting on, that they're waiting to pay out for some damage that they may never have to pay out. But they're sitting on it to make sure that if there's ever a claim, they have to pay it out. So basically, you're paying them to sit on that money. When they have that money, what do they do with it, Doug? They invest it.
They are the best investors on the planet, hands down.
Yes. Well,
the quality ones are.
Yes. Yeah. And there are some good ones out there, by the way. Warren Buffett's not the only one. There's some other ones. So somebody like Warren Buffett, who's famous for investing in Coca-Cola, Johnson & Johnson, like all these companies that he was famous for investing in, he did that by taking the float all your premiums bundled together, taking that float and investing it into companies that did really, really well. And at some point in the future, he has to pay that float back. But generally, they don't. The float just keeps growing, or whatever, depending on their practices, it grows or shrinks. But generally, it keeps going. So if he invested in Coca-Cola back in the 70s, he still owns that. 50 years later, he still owns Coca-Cola. And that Coca-Cola has grown from, let's say, $1 up to like $100. He doesn't have to pay tax on that. Like he just keeps, because he hasn't sold it. So it keeps growing and growing and growing. So I think right now the dividends on his investment in Coca-Cola are greater than the investment he had in. So I don't know the numbers, but that's what I've heard. Anyway, the point is he's making his original investment back every single year in dividends, not including the growth. So the genius of Warren Buffett and people like him are the fact that they realize that they can borrow money to invest and get paid for borrowing that money. So they have the float, right? They have their premiums, they have the float. That float grows every year. So let's say it grows at 5% a year, right? Let's say they take in 5% more premiums than they pay out every single year. So the float's growing by 5%. On top of that, you invest in Acme rockets, right? Roadrunner Acme rockets, and that grows 10% every year. So that's growing 10. The premiums are the float's growing 5%. That's 15% a year growth. So you're exceeding the market because you're also getting the premium growth on top of the stock growth. So that's the genius of Warren Buffett that people rarely talk about. They talk about his stock prowess, which was good. It actually hasn't been great lately, although he's not managing portfolio right now as much, but he's doing some of it. But anyway, his performance has been lackluster in the last, 15 years or so. But I can't take it away from his investing prowess, because for years and decades, he's been phenomenal. So somebody like that, on top of the fact that they're getting paid to borrow money, it's just an accelerant. No wonder he's one of the wealthiest people on the planet, because he's figured that out. And a bunch of years ago, a few hedge fund managers figured out, and they could not match it because they didn't have the underwriting capabilities that Warren Buffett had. So they didn't do nearly as well. They were also there for the tax structure. So a lot of benefits in property casualty, and I will tell you that almost nobody understands them. So if you go listen to research, if you watch a research, if you read a research report, you'll find some people talk about them. I can count on one hand the number of people who are smart at analyzing property casualty insurers. It's just a different way of analyzing, because you're looking at, price to book, you're looking at PE, you're looking at all the traditional things, you look at all the stocks, almost none of it applies. I mean, price to book applies, but generally speaking, almost none of those apply in the same way, because you're talking about a financial structure within a financial structure within a financial structure. And so you have to really understand how to calculate the float properly, how to calculate the discount that they're trading at. Like all these things you have to calculate. Most people can't do it or don't know where to look for. So it's really challenging. Very few people do it well. And I'll tell you, if you can buy them right, you can sit on forever and never have to worry about it again. But there's, like 60 public companies out there or more, a lot to choose from. And some of the big ones are good, some are not. So, it's all about timing. So just keep that in mind. That's your lesson for the week. Keep that in mind about property casualty insurers. Because I think this is, as we know, this is hurricane season, and it looks like Hurricane Kirk's getting a little angry. Some other ones Hurricane Milton looks a little angry. And so we'll see what happens. We'll see if there's more damage or if we just had the one. But either way, just something to keep watch of. I live in the great state of Massachusetts. I may be the only one who calls it that, but I digress. The great state of Massachusetts has a commercial funded by the state that says, you can't win the lottery if you don't play. For the moment, let's ignore the fact that there's a state-sponsored commercial suggesting that you go out and spend your hard-earned money gambling on lottery tickets with odds of over 100 million to 1 of winning. But it's true, you can't win if you don't play. I'm giving you the same opportunity here in the show. The only difference is I'm not asking you to buy a lottery ticket. I'm only asking 5 to 10 minutes of your time. But I will pay you at least 100 million Zim dollars for your time. we do have some foreign listeners. So if you don't like Zim dollars, we may have some other currencies as well. If you want to earn over 100 million Zim dollars, go to www.moneytreepodcast.com/free money to get your free money today. So lots to talk about this week. Where should we start, Doug? Where do you want to hit on? I actually got some other topic. Actually, I do want to share a listener comment before we go. I thought this was a great comment. I wanted to share it with everybody. This is from Lazha. Are 55 years in Tunisia to transfer 30,000 to visit your country and live with you forever. Your transfer money, Graham, in operation figures before 10/10/24 to my postal account, posted city. I can't read that, in Tunisia. Like, I'm sorry, I had to read this because I got this. I don't get many of these, but this is. Oh boy, this is the Nigerian prince. I don't even understand it. Like, if you're gonna ask me for money, like, at least make it believable. This is the funniest one. It's just the most unbelievable thing. I don't even know what my incentive is to send money to this person. Like, it doesn't make any sense.
Kirk, they've actually put out publications on this about how to kind of read through and understand if something is a phishing email, and it is a repeated pattern that the majority of the time phishing emails will have typos, poor English. It's like, with all the money we know, we can see that they're making in terms of this fraudulent activity, that they couldn't use Grammarly. It's not, description's pretty inexpensive, or just hire a bunch of people that can actually put these together. It's almost as if they're intentionally putting in these errors. They're terrible, but yet people still fall for this.
It's bad. It's bad. I don't understand it. But hey, like I said, there are some people who will fall for it, and so there's something for everybody. I'm gonna share.
You fell for it, didn't you?
I did. I was very close to sending $30,000 to this random stranger. Good for her for knowing English. Anyway, so I just wanted to share this. This is Hurricane Helene's financial impact, puts it in the top 5 of costliest hurricanes. I don't know. Helene was pretty bad, so I'm not sure how they calculate these things. I'm actually the insurers know how to calculate it because they're the ones that are paying for the damage. But very interesting. I didn't realize Katrina was that extreme. I know it was bad, but Hurricane Sandy, I think that was the one in New York. That was the one I was talking about. And then
it was. I did that research when you were talking. It was Sandy,
yeah.
and it was it was more of a wintertime hurricane, or it had cooled off, but it was that swell of water that just flooded right into the downtown.
Yeah, and Ian and Harvey, I don't even remember them. Ian was 2 years ago. Harvey was 7 years ago.
I remember Harvey really well because we were actually down in Dallas at the time, and that's the one that basically came right over Corpus Christi and Houston and just wouldn't move, and just rained and rained and rained and flooded the entire eastern coast of Texas. Yeah, that one was really bad.
Okay, good. Yeah, I hadn't realized that. Yeah, that's right. Okay, well, I just wanted to share that just for reference. I think it's interesting just looking at all these things in context. All right. So let's dive right in. I'm going to talk about a few things here. And actually, you know what? I got one more. Yeah, you know what? We'll do that next week. So there's so many things I want to talk about, and it just never have enough time. All right. So first thing I want to talk about here is, so as of last week, it looks like there's a 0% chance of 50 basis point rate cut in November. There was a very high chance. The Fed pretty much came out and said we're going to drop another 50 before the end of the year, and the market had a 53% chance that was going to happen in November. And now there's close to 0% chance. I think it's 2, but anyway, it's kind of funny how the market totally changes on the drop of a dime on certain information. And we had jobs data come out, and it was a lot better than expected, and they revised it up. Now, it always makes me wonder. We had a big job revision a month ago, which we somehow misplaced 900,000 jobs. Oops. And I don't know I don't have the numbers in front of me, but we had better than expected job, fewer job losses or better job gains in recently, and they made some upward revisions. Now, the point isn't those numbers. I will make 2 points. First is a point I made last week: be very, very, very careful about trusting any numbers 2 months before an election. Now, a lot of tomfoolery and chicanery can happen before an election, especially with a sitting president. Well, it's not really a sitting president who's running again, but someone in his party, or someone on his team, I should say, not his party. So just be very, very careful about government numbers around election, because there's so much room for quote unquote error or revisions to happen around an election, right? They can fudge numbers. It's not hard to fudge numbers. It's not hard to put your finger on the scale and say, oh, yeah, it's a lot heavier. That happens around election time. And and to me, it seems very coincidental that it's happening right now. And to have a 900,000 job revision in the wrong direction and then have a revision up the month before just seems a little bit interesting timing. Now, I will say this, that if you're trying to think about, well, this government number means this, so I'm just going to go along with that, I'll tell a little story. And I was trying to find it this morning. I couldn't find it. So Edward Kirshner used to be the chief investment strategist at Paine Webber. When I was at Paine Webber, he was really, really good at trends. He was the best trend identifier on Wall Street at the time. He got lots of accolades, got awards. He was phenomenal at describing and illustrating trends. Horrendous stock picker. Worst stock picker I've seen. I mean, They started this thing called the Strategy Fund in '99, and everyone at the firm called it the Tragedy Fund because it was so horrendous.
Sounds like he was built for index investing. It would have been great following trends if he just invested in the index.
He was a great researcher, and they decided, oh, well, he's doing such a good job. Let's just give him a fund to manage, and we'll raise lots of capital. And I was like, oh, that's dumb. And they had to rename the fund 5 times after that before they mothballed it completely. It was a terrible fund. Anyway, I don't want to take anything away from the guy because the guy was really bright. He's just a crappy stock picker. So, which isn't hard because a lot of people are crappy stock pickers. But I will say the one thing I really liked about him is he was a showman. So I saw him present a few times, and brilliant showman. And if I can find the chart, I'll put it in the show notes. And one of the charts I remember was pretty awesome. And what he showed was basically GDP plus revisions for 10 years. And so it showed the most recent GDP number. Let's say it was like 3%, for instance. And then it shows, and then it shows like the year after, and it shows like 2%. And the year after that, it was revised to 5%. The year after that, it was negative 1%. And it was revised. And if you look at all the revisions over 10 years, you don't even know what the number is because it's revised so frequently and such a dramatic way that it's a useless number. And that's the point, right? It's not that, oh, it's 3%. The problem is 10 years from now, that number could show up as negative 1% because they revise it so many times and for so many reasons. And honestly, 10 years from now, who gives a crap? Who cares what it was 10 years ago? And frankly, I mean, I do this on our website. We have inflation numbers. Inflation is revised so many times that it's a useless number. So when I put up the numbers, I put up the numbers when they're published. I don't put up revisions because if I put up revisions, I would do nothing else but other than revise numbers for the past 100 years on inflation numbers. It's ridiculous. And then they change the inflation calculation. I mean, the inflation number has been revised like 3 or 4 times in the last, I think, 40 years. Shadow Stats actually puts out the different revisions, which is kind of cool. Actually, sorry, not revisions, calculations. It's calculated differently. So it's changed CPI. There was like 2 or 3 before that. Anyway, they track them all. So you can see the original inflation calculus, what it would be today, and you can see the other revised numbers. So you can see how it varies, and it's dramatic variation. So I only say this to point out, if you're reliant on government data, you're missing it. You're completely missing it. It's like 3-card Monty and you think you're going to win, right? You're not going to win. Don't play. Don't play the government data game. Now, I'm not saying you shouldn't pay attention to it. You should, in the sense that everyone else is paying attention to it, and you need to understand how the market's going to react based on the data. So that's what you want to watch for, not the data, but how how the market participants are going to react to the data, because that's what's important. What are people thinking? Where's the trend going? Where's the market going? Now, at some sense, you need to be able to follow some data, or else if the market crashes, you're going to be way behind. So you have to be monitoring it, but I wouldn't get too tied into it and say, oh, well, it means this because they said that. Yeah, we don't know. I mean, the data could change. They could be manipulating the data. Who knows? And I know they manipulate it. People have come out and said that, yeah, I was in the government, whatever office, I forget what office it was. I was in there and they said, well, they're like, oh, I came up with a number. No. The number's this. What do you mean? I had this. No. The number's that, right? And it was clearly stated, this is the number. So, I'm not saying all the numbers are manipulated, but just keep in mind that it's not hard to do. So don't bet all your chips on government data. Just use it as a guide, not as a necessarily making all your decisions. So, Doug, what do you want to talk about next?
Well,
We got a whole
I want
bunch.
to add one thing in there, and this just came out the other day. But part of the number that you're seeing that came into September, even though it spiked for job hirings, and again, we've seen so many of these revisions. Let's wonder what we're getting. But a record, and I've got a chart on this, but we can just say it out there. A record 785,000 government workers were added in September, pushing the total number of government workers to a new record high. So one of the things that's been occurring, and we talked about this a little bit previously with hiring and jobs reports, is that when they went back and revised the data, what they discovered that was built into it is, first of all, there's full-time employment, and there's part-time employment, or there's also people working multiple jobs, and there's also private sector employment and public sector employment. And so the one thing that is easy for the federal government to manipulate in the job market is federal hiring, because they control the additions of people to those jobs. Now, again, not reading anything beyond that, but understand there's a big difference between the private sector hiring and the public sector hiring, because the public sector is going to be less sensitive to obviously what's going on economically. And in many cases, again, whether you're a Keynesian or other types of economic theory, in many cases, when conditions are more challenged, you're actually going to see a larger potential number of federal government hiring, because those government services are supporting, the systems that are out there that might be needed when the private sector is kind of struggling financially to be able to do the same. So just making sure that kind of clarity there on some of those numbers that are coming out, like Kirk said. This is something that we are a month out now from election, which is crazy. How do you feel about that, Kirk? Only a month away from the presidential election. That's definitely feel like this is really just kind of went from starting to see some things last year, and all of a sudden, boom, hit the accelerator. We're here. So a lot's going to happen, and maybe just spin it back to you. Your thoughts, because you've seen kind of what's happened in previous presidential elections. But how do you kind of foresee the next 60 to 120 days?
Yeah, it's interesting. I've been thinking about this a lot because I had this thesis this summer that the going into the fall, either the stock market would be going through the roof and all full steam ahead, um, and I would characterize that as a manipulated market, for for the Democrats, right? For one way, shape, or form, it's being pushed higher, well, more than it should. Um, the other way I would look at is if they didn't want the person to win, it would be an S show, and clearly I would guess the entrenched powers that be want Harris to win. I mean, just the corporate media, everything is just she went from a nobody who got no respect, and frankly didn't hear from her at all, and nobody wanted her to. Everyone loves her. She's the best thing since sliced bread. Overnight, she didn't get a single electoral a single vote, because obviously she missed the primary and Biden got it. So you had this situation, which I look at it and I just start laughing because the Democrats thought that Trump's whatever January 6th or whatever it was an insurrection. Was it 6th or 11th? Or whatever, it doesn't matter.
January 6th.
January 6th was an insurrection. So somehow you're going to take over the government without guns. Yeah, good luck with that. But anyway,
but they had horns. I mean, they had horns.
Yeah, I know. The whole thing was it was theater basically. And so, not that people didn't get hurt, but people get hurt all the time in stuff. But the point is that's not really an insurrection, right? That was, it is what it is, right? And they were calling that an insurrection, but yet you have a candidate who nobody voted for and who was replaced at the last minute, and you could have all these conspiracy theories. Doesn't matter, right? The point is there's a lot of shenanigans going on in government on both sides, right? It's not just Democrats. I'm picking on the Democrats because it's just so ridiculous, the hypocrisy on the insurrection thing that people are still talking about. It's like you just saw that happen. It just happened with somebody, right? With Harris, like it was basically insurrection against a sitting president. And it is what it is, and
it's a shadow insurrection.
Yeah, I mean,
it was behind the scenes, behind curtain.
My point is you can't trust anything government related now because the corporate media, the powers that be, they're getting what they want and they're telling you what they want to hear, and it's just frustrating. So I just try to stay out of it because all the shenanigans going on, it's just so beyond believable that if I actually paid attention, I'd get so frustrated and so angry at all of it that I would
might be a hurricane.
I might turn into a hurricane. Absolutely, yeah. But my point is a lot of people are feeling this and they are frustrated and they're not happy about it on both sides. I mean, the fact that you see a bunch of lifelong dyed-in-the-wool Democrats moving over to the Trump party shows you how ridiculous the Democratic Party has become. They're lying to their own people. They're gaslighting their own people. It's so far beyond believable. And these are people who don't even like Trump. They're like, I don't like Trump, but what's going on in the Democratic Party is so beyond ridiculous that I can't stand for this. So I appreciate people who are willing to do that because those people are thinkers, right? Those people are, they're people who are being thoughtful in their decision. I saw a few of these. We're going to poll or survey these undecided voters. Let me tell you something about undecided voters. There is no such thing. There's no such thing as an undecided voter. There are people. I mean, think about it. There are people who are Democrats. There are people Republicans, and either party will vote for Hitler if he's the head of their party. And that's the truth. You say, no, I won't do that. Yes, you will. You absolutely will, because you're voting for whoever is on your ticket. And there's statistically 35% of the people fall in that category.
And Stalin or Hitler, two ends of the spectrum, guess what? Neither one of them would make a very good president.
Right. But both parties would vote for that figurehead. And you don't think you would, but you would, because there's 35% of you who will do that. Right. And that's just statistics. Right. And I'm not calling a single person out, but it's something to think about. If that's how you're thinking, then maybe you should be more thoughtful about your choices. Right. I'm not saying you're wrong. I'm just saying, like, if you're falling into that trap, like most people do, then you just have to be mindful. Now, there's another third of the country that is in the middle, right? You would say that they're undecided. I wouldn't call them undecided. I would just say they're in the middle. They can be swayed either way. But anybody who says they're undecided, they're not. The undecided people are the ones who are waiting until the last minute to see who's most likely going to win, and they're going to vote for that person so they could say, "Yay, my team won." That's an undecided voter. How can you be undecided in an election like this? Now, there were times decades ago where the candidates were closer together. They were trying to get that middle vote. They were trying to be more centrist, more moderate, and say, "Oh, I'm trying to attract," because they know they got their side. They don't have to worry about their side. Their side's voting for them no matter what. They're trying to get the centrists. They're trying to get the middle voters. But now, what I've heard is both parties, and it's not what I've heard. Everyone knows this by now. But basically, what's happening now is the parties are trying to get the extremist vote because that vote matters. And somebody was saying this. I was listening to a podcast the other day. I thought it was actually a brilliant analysis, and said, neither Trump nor Harris is a fascist or a communist, right? Is that they're neither of those things. However, they have to cater towards that part of their party that is looking for that because they need those votes. So Harris is trying to get the communist, and we have communists in this country, by the way. She's trying to get those votes. And so she has to say things that are going to lead to getting those votes. Now, are the Democrats going to be over the top communist? No, because there are wealthy people in this country who are Democrats who don't want them to get rid of the carried interest tax or any of that. Like, there are people in power who want to stay in power, and they have their party and they can control their party. The Republicans have the same. Both sides do it. That's why you never really get any change in this country. You get much more of the same because they're both being managed by corporate interests and all these other things. So if you think about it, like, as much as I don't think highly of her, because she hasn't really earned much, I think, there were better candidates if there was a runoff than her. I think Shapiro was a potential candidate. I guess if Harris loses, I think Shapiro will probably be run next time around. He's a viable candidate, and there's a few others that are viable candidates that would be very good candidates, but they didn't have a chance because, they couldn't give it to somebody else. Right?
And they needed time. Anybody that's going to be a viable candidate is going to need that time to hit the ground running. There's very few people like Clinton. They just come out of nowhere and boom. I mean, for them to switch that late in the race from Biden, they had to go to someone whose name was already popularly known, and she was by far, she was the default because she's the VP. Shapiro would have never had enough time to get the marketing to get the public to recognize it to be a viable candidate in this election. So I see your point for the next one.
But also they couldn't step over the woman of color, right? She had
for sure.
You couldn't be sexist, you couldn't be racist, so you can't step over. And I've talked to some Democrats who are in the in the establishment, in the machine, and they're like, "Yeah, I know we really don't want her, but we can't. We don't really have a choice, so we're stuck with her."
And she's the VP, and a VP is a natural candidate, and she's got all of those, all those metrics.
Right. So you can't really do it. And it's unfortunate because I would have liked to have seen the Democrats put up somebody of quality. And there are some out there. They just didn't have a shot. And the Republicans, I honestly don't know what they have beyond Trump. I mean, he's a unique individual, a populist. He's very unique. I'm not sure we'll ever see a person like him again. Yeah, very unique. That's an interesting phrase. But anyway, point being is, so you have this runoff. I don't know if it's going to be a blowout or if it's going to be really close, but it'll be interesting. That's for sure. I don't think the world's going to end no matter who wins. People think that the world's going to blow up if either one wins. I don't think the world's going to blow up if either one wins. I don't think it really matters. I think we'll see very different policies. There's people I would like to see win, but at the end of the day, my vote doesn't count because I live in Massachusetts. So if I'm a Republican or Democrat, it's a Democratic state, so my vote doesn't really matter.
Sorry, Tom Brady's not going to get enough of the vote, Kirk. I apologize.
Tom Brady lives in Florida, doesn't he?
He does now. I know, but you might sway him to come home. I mean, if that's who Massachusetts would like to, at least 10 years ago, Massachusetts would have loved to have elected him, but I don't know now. He might be a persona non grata in Massachusetts now.
Yeah, we're a state of hypocrites. We call them the NIMBYs, the not in my backyard liberals, or the limousine liberals in my state, the John Kerrys of the world. I don't know. The hypocrisy in the state is just laughable, but it is what it is. And like I said, there's some states where your vote doesn't count, which is like 42 of them where your vote basically doesn't count because they're heavily one side or the other, and it's not going to change. So unless, of course, you really destroy your state and you cause everyone to leave and you move to another state of the other party and then you take over that state, then it could possibly
Texas, excuse me,
California, New York. Yeah. So anyway, all right.
Hey, can I add a couple things to this, because you actually have a chart on this, which I think is perfect timing on this. It's the average S&P 500 performance around U.S. presidential elections since 1972. So it's a good segue. Well, while you're bringing that up, because I think, first of all, I think what's really important to point out when you do bring it up is the averages. And one thing, the problem with averages is a really important thing for people to understand. The problem with averages is they're average, which means it doesn't mean what's going to happen now. The other thing too, though, going back to I think you made a good point about the centrists versus the extremes. And I'm not making this comparison, but if you go back and you know anything about history and you go back to Germany in the 1930s, again, I'm not trying to imply anything here, but that was a time in which, again, the extremes. On one side, you did have the fascists, the Nazis. On the other hand, you had the communists. The centrists were getting squeezed and squeezed and squeezed. Like I said, Kirk said, we're not saying Trump or Harris is, the Communist Party and Trump's not the Nazis. But the point is, I think the communication or the focus on those extremes, especially with what is known about social media and how it has pushed people more into these corners, I think it has made them a bigger focus than the moderates in the past. The other thing, though, that's important to note is at a state level, and we've talked about this before in the past, or at least it's been a while, but generally speaking, because of the way they do the political voting, with some gerrymandering, let's call it that, you're going to get areas that are going to be always very strong Republican and other areas that are always very strong Democrat. And that is going to have a huge impact on the House of Representatives, because the House of Representatives, that representative might only be a representative to like 2 counties, and those counties could be staunchly red or blue. So they have to be more extreme to get elected there. We saw that backfire years ago. I forget the congressman in Florida. He tried to go a little more moderate. Boom, he lost the primary. He was out. He was a very popular representative. The Senate is different, because the Senate has to be elected. Senators have to be elected from the entire state. So they've got to be able to somehow pander more to both the blue and the red. And when it comes down to the election time, the Senate is generally going to be a more moderate overall collection of individuals that are voting. And that's, again, in theory, some checks and balances. There's more kind of go down on that political theory, but what I wanted to get back into is on that chart, because what we're looking at is 54 days before the election, and then up to 54 days after the election. We can see is that typically in the 1 to 2 months prior to the election, the market tends to be pretty volatile, up, down, up, down. It's that uncertainty historically that occurs in trying to figure out what's going to happen and who's going to win and what's going to be the outcome. Whereas you could see the most important thing here is that typically on the 54 days after the election, the market has historically been a little bit negative coming right out of the election, but wildly successful and positive leading to those 2 months after. I think, again, it's Wall Street tends to settle in a little bit to, okay, this is who we've got. Now we know how to make investment decisions. Now we know what economic policy is going to come into play. We've said this before, Kirk, you and I. Wall Street doesn't really care that much about whatever decisions people are going to make. What is the most important thing that while there's Wall Street? Uncertainty, right? As long as there's a pattern, they can work around it. And leading up to an election, there's a lot of uncertainty. That's not generally good for Wall Street. After an election, no matter what happens, whether it's right, blue, or red, there is certainty, and that's positive for the markets. I will go back to what I said about averages. The problem with averages is that they're average. We've already seen September is generally is historically the most volatile and often most negative month of the year. What happened in September, Kirk? Was it a bad month? No.
Nope.
We can go back to a chart that shows that as much volatility and risk and things that leading into this year. There's another chart that we've got that shows, I believe, that the S&P 500 in 2024 is the best start to the year, I believe, possibly in history in the S&P 500. So, obviously, there's a lot of variables that went into play. Now, I will say that plays into another average because we've talked about this before. What are generally the best years of the stock market, Kirk? Historically, the year of a presidential election. Yep. So that average is playing very much into the norm. But so far, if you look at the history of September and you look at the history leading up to an election in the last 60 days, it tends to be volatile, if not negative. And this year we had a really good September. And so far, again, because of some policy decision, look what China did, injecting a ton of capital, M2 monetary money supply. We've talked about this before. It's how much money's out there. That has spiked. And if M2 money is up, people have, people, governments, entities have money to use. And that tends to get funneled into driving the market higher. So since we're not currently as volatile as we are historically leading up to the election, what does that mean for after the election? It means that the market could do really, really well, or the market could be flat, or the market could go down. It's hard to say, but the odds historically are that once we have some clarity, it's going to end up being a better outcome. It's good for the markets because Wall Street then knows what they know and can work with that data.
Yeah. It'll be an interesting outcome for sure. And I think as we kind of get into this election, one thing's for sure is that we are in a volatile month. Historically, if we end up having a good month, then my vote will be in for a manipulated market. And then after the election, we'll see. I do think that we're overdue for a recession. The government numbers, the best we can tell, because we just had a section on government numbers being, not fabricated, but let's say tilted in one direction. I will say that the data that we've started to see, or at least how Wall Street's reacting to it, is that we'll have a recession probably early next year.
Yeah.
And the fact that the Fed was talking about lowering rates a full percentage point this year as of last month shows that they're more scared than the market is leading on to. So if the Fed is more scared than we see, that scares me. And so any sort of big rate drop from the Fed means that, we probably have some pain to come. And that typically doesn't happen in December. It typically happens, in the new year. So my guess is no matter who wins, maybe we get a run up for the rest of the year. We get a good November, a good December, a good January, and then we start to see some volatility, let's say. I don't know. I mean, I can't tell the future, but if you look at, history, that's probably what would happen. Year 2 of a presidential election is typically the worst year, which would be not next year, the year after, but obviously that doesn't always align with government statistics or economies. And I think at the moment, we're starting to see a lot of signs that the consumer is getting squeezed. And I think that's the real challenge. So I want to show a few charts here real quick, and then we're going to wrap it up in the interest of time.
Well, I want to run through a couple of things. You can pull some charts, and I think they hit on it. Just some things that I've seen, and whether you can kind of pull your stuff in. But the number of listings for available short-term rental properties has spiked. There's a lot of people that bought those. They're starting to sit, and they're now reselling them. They bought them at high mortgage rates. That's certainly a concern on the general consumer. The safety net, the savings safety net has really dropped. We've got higher job cuts that have starting to come through. We're starting to see there's actually more people 55 plus that are working than people who are in the, basically 25 to 35. That's certainly a strain when your next generation is struggling to be able to afford to live, and and the cost of housing. We've talked about that. It's expensive to get the money for it. It's expensive to buy it. The prices are too high. We've talked about in past weeks, credit card delinquencies have been spiking. 48% of U.S. homes for sale have now been on the market at least 60 days. That's starting. So there's a couple things right there. I don't know if that overlaps some of the things you're going to talk about, but definitely some things that show that the U.S. consumer, and the number of job cut announcements, 174 a year to date, 3 times the volume seen in 2022. So definitely a few things there. And at the same time, the Shiller PE, Kirk, is approaching its peak, which again, historically, the Shiller PE gives you an indication based on the stock market's current price what the next 10 years of returns could look like. So some of these things there, again, a couple of things I just want to note while you're trying to pull up those charts. So
Yeah, I mean those are good. I mean we've got a bunch on housing here too, which I'm trying to go through these real quick, but let me just kind of run through these quick because I just pulled these this weekend. It was interesting. So, all right. So first thing as we go through this, the first thing is Q3 earnings. So that actually starts this week. Well, actually, technically, it starts in force next week. We've got all the big, banks. You got Bank of America, Goldman Sachs, PNC, Johnson. Then we got Johnson Johnson, Citigroup, on that Tuesday on the 15th. Then we got, so that week tends to be a really big week. Then the following week is a big week. So these are all the companies that are going to be reporting over the next few weeks. Now, it's important to note because we're going to start to see signs. What we tend to see is trends. So if there's a bad trend, what will typically happen is a lot of companies will come out and throw out their garbage. Earnings tend to be managed. So if companies are going to all go in one direction, let's say, oh, this terrible economy, things are bad, every company just starts throwing their garbage into the numbers, even though the numbers may not be bad, but like they've got this stuff behind the scenes. They're like, oh, it's terrible. And then, oh, look, we did better. Right. So you kind of have this earnings surprise to the upside. Well, it's really not a surprise, but it's a surprise to everyone who doesn't know how the game's played. But that's how the game's played on Wall Street. All right. And then we have, let's see, we got a few of these. Well, these are all individual.
While you're looking, I want to correct myself. The S&P clocked its best performance in the third quarter, not all time, at least from the data that I saw. It was since 1997, which is still
just quarterly data.
Yeah. No, they're the best performance through the third quarter. So it was the S&P annual year-to-date return through September. Yeah, it was one of the best. It was the best quarter since like 2021, but since 1997 is the best year-to-date. So not all time. Just want to clarify.
All right. So those of you who are sad because we didn't give you a chart crime today, I'm not going to leave you hanging here. So here we go. Here is a chart crime by BlackRock, Morningstar. I don't know who actually put this out, but the source was BlackRock, Morningstar, and here's the chart. So for those of you audio viewers, for the last 70 years, $1,000 invested in 1953, depending on which party held presidency. So it shows on the yellow line, if you only invested in Republican candidates, you'd have one number. If you had Democrats only, you'd have another number. And both those numbers are very similar. Let's just say there's the 1,000 turned into, I don't know, 20,000, let's say. You can't see the number because the scale is just so bad. However, if you invested the entire time through both parties, instead of having $20,000 turn into 20,000, it was actually worth 1.6 million. Now, I have to call this a chart crime because it doesn't take a rocket scientist to see that those numbers aren't even close. So what they're basically saying is, well, if you only did one party, you made a 20x return. If you had the other party, it was a 20x return. But if you invested in all of them, it was like a, whatever it is, 16, that'd be like a 160,000 X return. It's a ridiculous.
It's NVIDIA, Kirk. Oh,
It looks like NVIDIA, but it's not. It's definitely not. The point being is, it is a ridiculous chart. I don't know who put this together. I don't know if it's an intern, somebody who doesn't understand math, but it's a chart crime. And I've seen this put out by like 100 people. No one is stopping to look at and say, this doesn't make any sense. I would
one plus
love for
one equals 6,000, huh?
yeah, I would love for somebody to pull this apart and show me exactly how the math works out, because this is why I don't like paying attention during presidential elections. It is ridiculous. It is completely ridiculous. So when Wall Street comes out and said, well, if you miss the 10 best days, you would have lost a 10% return a year. Well, yeah, if you miss the 10 worst days, you would have missed out on 30% returns a year. I mean, it's a ridiculous chart. It only shows you half the picture. So I don't know what the other half of the picture looks like, but it's not this. So, and I love the thing at the bottom: past performance does not guarantee future results. I, I mean, of course not.
I'm not sure past performance in this chart is a guarantee of past performance.
I know that's. I agree. Yeah. So anyway, I had to show this chart crime. We had to, we got to get at least one in a week, but this is terrible. So this deserves to go into jail with all the rest of the chart crimes. So we're going to wrap it up here in the interest of time. Doug, where can people find more about you?
Hey, thanks, Kirk. I'm going to spell this out for everybody. Mergent, Mergent. That's Mergent College Advisors. Listen, there's multiple ways to pay for college. The cost of college has gone up, as people know. It's one of the biggest stress points of anybody who has children. Who's, again, this is really impacting younger baby boomers, Gen X, and older Gen Y millennials. You're starting to see that your kids are coming. You're coming there, and you look. Maybe you've tried, maybe you saved a little, maybe you haven't. But all of a sudden, you are looking at the price of a luxury car or the price of a house, and you're going to have to pay that over 4 years. Now, what do? Do you pay cash? Do you have it? Do you have assets? Past income is the stuff you've saved. Most people haven't saved enough of that, so they got to rely on current income. And then all of a sudden, you got to hope that that income stays and maintains. As I said, we're seeing job cuts go up. Still a lot of pressure, and most people, even with current income left over after expenses, no matter what the affluency, don't have enough to still pay for the cost of college. So that means they're relying on more debt. There's $1.4 trillion in college debt out there. It doesn't have to be this way. We've got ways to show you multiple ways to pay, and not just getting scholarships and getting the cost down, which we can help families with, but also how you pay could return tremendous amounts of money back to you, which can be used for other goals like retirement. So it's really important that you take an opportunity to understand all the options that are available for you. Find out more at our website, mergentcollegeadvisors.com. Get started, because if you don't have a plan, hope is not a plan. It's really expensive. Reduce the stress, have peace of mind, find out more, and give us a call if you have any questions.
Thanks, Doug. Thanks for coming on. And I forgot one more quick piece of news is, if you guys haven't seen it, China's stock market is having a short squeeze. It has spiked tremendously in the last week or so. So keep an eye on it. I'm not suggesting anything good or bad is going on. It's just interesting to me. It looks like a short squeeze. People don't want to be left out. But anyway, not something I'm paying too much attention to otherwise. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.